Welcome back. You're watching Traders Corner, and joining me as always is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we'll start off as we always do, talking about the S&P 500. And last night, being Monday night, there was a bit of I called it the Trump Twitter tantrum. So I'm not sure if that's derailed US markets or if it's just a temporary setback in an upward march.
Yeah, for now it seems kind of like it's just a temporary setback for the time being, but let's have a look at it and see. Here is our S&P 500 chart, as we always look at, and what I've said many times in the last couple of weeks is that it looked as if it was going to go up and push to retest those September highs from last year, 2940. It's done that, and it seems to be consolidating around that area just below the prior highs now. If we just zoom in a little bit more closely on the more recent trading activity, here you can see what I want to really show you clearly is yesterday's candlestick pattern, that being Monday. Obviously, we came in and over the weekend, Donald Trump had tweeted out the fact that he was going to introduce these additional tariffs on Chinese imports starting from this week, Friday, and the markets had a bit of a tantrum, as you said, about that. Particularly the Eastern markets got a real smack. The Chinese market was down over 6% in the morning, and the US futures were down quite sharply in the morning as well. But by the time the S&P 500 opened, it did open in negative territory, but it actually pushed quite a lot higher into the close. And in fact, you can see looking at that candlestick pattern there, it's an open candle, which what it means is that the high or the close was actually right near towards the upper end of the high of the session. So in the end, the market didn't seem to worry that much about it. What's significant now is this 2,900 support level. We need to continue seeing this US market holding that level. And as long as it continues to hold that, then I think there's possibility that it might still go higher. If it breaks down below 2,900, which is that lateral support, then your next level is probably the 50-day moving average down here, which is at around about 2,850. And then we would possibly look for some support to emerge around that sort of area. So for the time being, it doesn't look like it's catastrophic. I mean, this market has run very, very hard. So a little bit of a consolidation is not entirely surprising. Yeah. But obviously this trade discussion this week is the key thing. And there is still a Chinese delegation on its way to Washington, as far as we know now, which is due to pursue or continue with the trade discussions that were scheduled to go ahead anyway. And the question is, is Trump just trying to strong arm them ahead of the talks, and ultimately do they find some sort of a middle ground? So who knows, really? I suppose we'll have to watch this very closely over the rest of the week. Okay.
Although, as you said, sometimes maybe the market looks for a bit of an excuse to sell off, which last night would have been. And I suppose even if maybe talks don't materialize in a favorable outcome, I mean, do you think that could then, call into place the top, and we could drift all the way back down?
Well, it's possible then that you would see a little bit more selling off in the market if the trade tariff discussions completely derailed. Yeah. Then I can't see that is a good thing for the markets. You would then expect that it's going to come down a bit, but not necessarily collapse in a heap, but maybe just a healthy consolidation and a bit of a correction. Yeah.
Now, if we talk about our own markets, this is the week to end all weeks. We've got the elections tomorrow. We spoke about some of the scenarios last week. We had a negative close last night, but today we seem to be doing okay. But I guess a lot of money is just on the sidelines until we get the election results.
Yeah, that's very much the case. It's been a quiet week so far. Obviously, Monday this week was also a bank holiday in the UK, so that meant that a lot of foreign trade that we would have otherwise seen was vacant on Monday, so the market was quiet. Today being Tuesday, a lot of market participants are sitting on the sideline waiting for the election. So it does seem as if it's really just a wait-and-see game for the time being, and then we'll need to see what those election results look like. But in terms of the broader market, in terms of our top 40 index, nothing's changed really much from the weeks before. Continues to trade in that upward channel that's been intact for the last 5 months now. It seems to be consolidating a little bit, but while it's in that upward channel, we've still got to generally speaking, give the benefit of the doubt to the upside.
Yeah. Okay, well, let's talk about some of the recent trades. And last week we discussed Google because, of course, last week was when the Google Alphabet results had come out, a bit of a shock to the market. The Google shares got smacked, even though you'd managed to, I suppose, profit from a nice little upward march, and then it all fell in a heap. So where are we now in the Google trade?
Right, yeah, so here it is. The reason we did the trade back in late March was that there was this falling wedge structure in the overall rising trend of Google's share price. Those are typically bullish continuation patterns within a rising trend. So I decided when that pattern began to break to the upside, that was the signal to get long. So we bought 10 CFDs at $1,183 per share. And my intention then was to sell out at $1,230, which I did on half of the trade. And at that stage, I said, what I'm trying to get better at this year is running profits, because often we find we leave money on the table by not running our profits enough. Yeah. So, and for me and for everybody else, every other trader, there's ongoing learning all the time. Anyhow, I figured let's bank half the profit on that trade at $1,230, which was our original target area. So we did that, and we made $233 on that half of the trade. And the remaining half that I kept was looking superb, and I was really looking clever for quite a while. And then, of course, the results came out last week, and that was the Tuesday before we recorded the show last week. And I said on last week's show that when Google shares opened, we were going to get an almighty hiding, because you can see the gap that happened there. And that's exactly what did happen. The share price gapped down very sharply. It was down 8% on that session, which meant that all of those mark-to-market profits that we were crowing about were vanished in literally in seconds. What's happened is the market, or the share rather, has traded down, and it seems to be finding a bit of support at around about this $1,160 area, which was that swing low in late March. Now, I've decided to actually hang in there. It has flirted with our stop loss at 1,160, but I've decided to hang in with this trade and just give it a little bit of time now. Often what you will find in a situation like this where you get this big gap down is it might actually stabilize and then gradually go and do a partial refill of that gap. Yeah. So I'm going to actually stick with the remaining half of the trade that we still have. I'm going to monitor the 1,160 level as our stop loss still. But for the time being, I actually haven't closed out the other half. I'm still in the remaining half of this trade. And we'll give it a chance to see whether it doesn't perk up a bit from here.
Yeah, well, it hasn't breached your stop loss, so integrity of your stop loss remains.
Correct. It hasn't breached the stop loss on a closing basis. It's flirted with it intraday, but on a closing basis, it's remained above the stop loss. So for now, I'm going to give it the benefit of the doubt.
What about Cap Industrial? Because that's also a share back in the local portfolio that you're still hanging in. Isn't it close to where you actually thought you might take profit?
Yeah, it is. We haven't spoken about this now for a couple of weeks, so it's important just to remind the viewers that we do still have an open trade in the stock. And what got us into it was when it gapped down there at the end of March. That was following book build where Steinhoff exited their remaining stake in Cap Industrial. And typically, as you saw here, you get a gap down in the share price. But my feeling was that once that overhang of stock was out of the way, you would then see a gradual recovery in the share price, and that it would probably go back up and fill that gap. Now, it has done that. We bought at R7.02, and we were looking for a move up to about R7.40, which would basically fill that gap. Now it's got there. It's gone just beyond R7.40. I haven't actually sold out. Again, in line with trying to give our trades a chance to run some profits, I want to keep this a little bit longer. And the other thing is that this is a proper domestic South Africa Inc. stock. If we do see some sort of a favourable outcome after the election, you may well find that this type of share actually is what could attract some flows. So for that reason, I do want to just stick with it for the time being. But what I'm going to do is I'm going to ratchet the stop loss up to those lows of last week. So effectively R7.20 is where I'm going to move the stop loss to. If it starts to go below there, then I'm going to get out and say that there's no reason to hold this anymore. But if we do see a positive reaction to the election results, then I think there could possibly be further upside here.
Yeah. Okay, well, let's talk about your natural bullishness reasserting itself, because you're going long this week on Bidvest. So ahead of the election, and Bidvest will benefit if there is an SA Inc. rally. Yeah. But it is kind of a bold call to make before we know what the results are. So
Yeah.
sketch out why you're doing this.
Well, it is, but I figured, look, technically, I do like this look of this Bidvest chart, and it certainly is the kind of stock that would rally if we get, Ramaphoria round 2, which is being touted by many, including myself. So I figured if I'm going out there spouting that sort of possibility, then I'd be silly not to at least back myself with a trade. So we're going long of Bidvest this week. There you can see the sort of medium-term chart, which shows that the share price has begun to break above this resistance zone at 215 Rand per share. That's bullish. If I zoom in more closely on the recent trading activity, what you can see is that it's had a nice rally throughout April. It's been consolidating above this 215 Rand area where it broke out, been trading in a range there, and it looks like it's now trying to break to the upper end of that range. So what I've done is I've gone long at 219 Rand per share with a stop loss at 214. So 214 would mean that it has to basically break out the bottom end of that range that I've identified for that stop loss to be triggered. For the time being, I'm giving the benefit of the doubt to the upside. And my target to the upside is 250 Rand, which is quite a generous target.
Very generous.
It's very generous and maybe even a little bit ambitious. We'll have to just monitor that. But that 250 was basically the high that we saw in the stock last year. And my feeling is that if it's gone through that 215 Rand resistance, then the next logical resistance is last year's high. So we'll see. I mean, I will continue to monitor this as things go. But I like the look of the setup. The only thing that worries me slightly is this negative divergence on the stochastic oscillator there. That does get me a little bit concerned. But I think I'm going to give the benefit of the doubt to the possibility that we could still see further upside in the domestic stocks here. And if that is to be the case, then I think Bidvest would be one of the beneficiaries of a post-election.
Of a true sort of SA Inc. Share.
Yeah.
Gossa, just talk us through the mechanics of that trade.
All right, so we long from 219 Rand, the stop loss at 214. That means we're risking 5 Rand per share. I'm going to risk 1.5% of our capital here. Now, we've got 160,000 Rand in our South African portfolio now. So 1.5% of that is 2,400 Rand. That's what I'm willing to lose if I'm wrong on this trade. So to calculate our position size, we take the 2,400 Rand and we divide it by 5 Rand per share. That gives us 480 CFDs. The target is 250, like I said, quite ambitious, but let's see. And then the risk to reward ratio here is 1 to 6. So I mean, if we get that right, this will be one of our best trades of the year, probably. It is quite ambitious, the target. But you know what? Let's see. If you do get a big round of Ramaphoria round 2, whether or not that is viable to think that or not remains to be seen. But if we do, well, then this is one of the likely stocks that would benefit.
Yeah, nice to land a big fish occasionally.
Sure.
Gosso, given all the activity on the portfolio, what do they both look like at the moment?
All right, so our South African portfolio is up a bit more from last week. We're currently up 7.5% for the year to date, mainly thanks to the movements in CUP Industrial that's been moving in our favor. And then offshore, we are now back in the red, unfortunately, for the year, based on the fact that Google trade that was looking so good for us last week, the remaining half of that trade that we're still holding has hurt us a bit. So we're now minus 1% for the year to date offshore, which is disappointing in the face of a broader market that's been pretty strong. But then again, we haven't been very active on this offshore portfolio.
Yeah, and just very quickly to remind viewers that they can get a weekly alert.
Yes, you can. If you go to traderscorner.co.za and you go to the middle of the page, you'll see there's a link there for a free weekly email. If you click on that and enter your details, we will add you to our emailing list and send you an email every Tuesday at about lunchtime detailing exactly what is coming up on this show for the week ahead.
Great. Garth, we'll leave it there. Thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.